Mike Santoli at the Barron's Roundtable, joined by Marc Faber, member of the Roundtable. Hello, Marc. Good to be with you. So obviously we come out of a year in 2009 when we saw central banks of the world kind of do all kinds of extraordinary things, money printing, etc. The big question coming into 2010 is, does that change? In other words, are the markets going to be freed from this kind of help? What's your take on this?
Well, I mean, we had an extraordinary year, 2009. The returns in emerging economies was frequently 100% or more. We also had commodities that went up more than 100%. So 2010 will not have these kind of returns. I think they'll be more moderate. Or if I look at the consensus, is all complacency and that the market will end up slightly higher this year. I think we could have a meaningful correction and then more quantitative easing, and then, but maybe the highs will be seen very soon or even today, and thereafter the markets may not perform all that well.
And will there be a place to hide or do relatively better?
Well, I think that there are some companies in Asia that are reasonably inexpensive. They're selling at, say, 10 times earnings. They have dividend yields of 4 or 5%. So with zero interest rates on your deposits, I don't think that these companies have a huge downside risk. I also happen to think that if I look at commodities, the one sector of the commodity markets that didn't go up last year were the agricultural commodities. So I think there we may get a move in wheat prices, corn, soybeans. So that would be a sector to look at. And then I still feel that in the mining sector, we have numerous gold exploration companies that are quite good value, given the fact that essentially more money printing is likely in the future and more fiscal stimulus packages. So I feel that actually gold mining companies are a reasonable bet.
Gotcha. Very good, Marc. Well, thank you very much.
Well,
Appreciate
my pleasure.
This is Mike Santoli at the Barron's Roundtable.